Inflation. That's our topic for today's Backstage Pass. Well, stocks opened up the day this morning higher, but have since reversed course, and midday stocks are down very sharply. Mortgage bonds are down a little bit as well. Mortgage rates opened up better than where they closed yesterday. Yesterday, the national average for 30-year fixed ended at 5.81%. We opened up a little bit better than that today, but we could be moving back into that territory. We'll talk more about that in just a second, but the topic du jour, the soup of the day, is inflation. Today we have PCE data that came out. We'll talk about that first. The headline data, PCE month over month, came in at a negative 0.1%. The expectation was up 0.3%. So the headline data month over month for July came in better. The headline data year over year came in 0.1% higher than expectation. So kind of a little bit mixed on the headline data, but still and very much in line, very much orderly. The month over month and year over year data for the core inflation, which strips out food and energy costs, well, that came in. Both of those data points beat expectations just a little bit, but as a whole, the PCE data came in, again, in line basically with what was expected. So not a lot of movement from the market on that. Now, at 10 a.m. Eastern time this morning, Fed Chair Jerome Powell gave a speech at the Jackson Hole Symposium in Wyoming, and he basically reinforced everything that the Fed has been saying for the last month. They're going to be aggressive and hawkish on their fight against inflation. They're going to be raising the Fed funds rate for as many times as they need to, and watching the data to see how basically aggregate demand, in the words of Jerome Powell, responds as they want to lower aggregate demand in the economy to help fight inflation. So nothing really new out of Jerome Powell or out of what the market is expecting. As a matter of fact, the market probably could have wrote his speech for him. It was just what was expected. But in turn, the markets have basically reacted negatively to this. So again, all three of the major indexes for the stock market, the Dow Jones, the NASDAQ, and the S&P, they're all down very sharply. I just looked a second ago, the Dow is down 700 points today. So a pretty big drop today. Mortgage bonds are down 20 basis points. The 10-year yield is up 3 basis points. Now, again, we said mortgage rates yesterday were at about 5.81% for a 30-year fixed. That was the national average. We were coming in at about 5.76% just a little while ago on the national average. However, with the way that the markets are reacting, the bond market is reacting and being down 20 basis points, we could see some repricing for the worse and we could start creeping back up into that 5.8%. We'll just wait and see throughout the day, see how that goes, but just be aware of that. Now, as far as news, this week is over. News is done this week, but next week is going to be another busy week. We've got Case-Shiller Home Price Index, FHFA Home Price Index. We've got ISM Manufacturing PMI data, which is a measure of inflation. We've got non-farm payrolls and ADP jobless claims. There's a lot of data that's coming out next week, and all of this data is going to be super important. I guarantee you the Fed is going to be watching, and the markets are going to be watching all of this data as well. But hey, we're going to let next week's problems and data stay in next week. That's all that we have for today, and that's all that we have for this week. Hope you have a wonderful day. Have a great weekend. Remember, stay positive, and we'll see you on Monday.